Coming up on the program, financial markets rise ahead of U.S. elections outcome. Modi says enhanced awareness and regulation will fuel Islamic finance growth in Africa. And South Africa to unlock 1 trillion rand infrastructure investment. Hello and welcome. This is Business Incorporated on Channels Television. I'm Chimeze Obi Iwagu. We'll kickstart the show with intraday market numbers, which were all positive in Africa. The JSE index in South Africa jumped 1.16%, while Nigeria's main index was marginally higher by 0.02%. In Egypt, the EGX 30 advanced 0.37%, while Kenya closed negative on Tuesday. It was a similar picture in the Middle East, where the major markets we track were all in the positive territory at intraday. Saudi Arabia's benchmark index surged to 1.31%, while the Qatari index was higher by 0.27%. In the UAE, the Abu Dhabi index advanced 0.87%, while Dubai's main index rose 0.65%. In Asia, Hong Kong listed shares of Alibaba tanked after the anticipated initial public offering of affiliate Ant Group was suspended amid regulatory concerns. The broader Hang Seng index in Hong Kong was 0.37% higher as of its final hour of trading. Meanwhile, stocks in other major Asia-Pacific markets were higher in Wednesday trade. Mainland Chinese stocks edged higher on the day, with the Shanghai Composite up 0.19% to about 3,277.44, while the Shenzhen Component advanced 0.585% to around 13,659 points. In Japan, the Nikkei 225 rose 1.72% to close at 23,695 points, while the Topix Index advanced 1.2% to finish its trading day at 1,627 points. South Korea's Kospi closed 0.6% higher to 2,357 points. Shares in Australia dipped as the S&P ASX 200 closed fractionally lower at 6,062 points. And moving now to Europe, where stocks rose this morning following a turbulent open as investors around the world keep watch on the results of the U.S. election. Conrad Boson joins me now to bring us up to speed on reactions from the European market. Hello, Conrad. Good afternoon. Good to have you back on the show.
Good afternoon, Jimmy. Thanks for having me back. And wow, what a great blouse you're wearing. All those beautiful colors. That's something to cheer us up today.
Absolutely. Thank you very much, Conrad. I did it on purpose anyway. All right. Well, it's been a nail-biting election night, and we're still waiting for a clear result on who is the next president of the United States, who the next president of the United States will be. European stocks started with losses this morning as Donald Trump won the majority votes in some key swing states. How's the day unfolding where you are?
Well, as you can see right behind me, it's a bit of a jittery trading day, but with a slight tendency to the upside. The German DAX has recovered a little bit from early losses. Of course, traders keep reminding me about what happened 4 years ago when Trump won an election for the first time. At the time, the stock market at first slumped and then recovered towards the end of the trading day. So also today, nobody really wants to predict how the trading day will end tonight. What I can tell you is that traders are really, or have been really glued to their television screens all night, that they've been taking all of the different statements coming from the United States. When Donald Trump started talking about how he wants to sue or contest this election in the Supreme Court, this immediately sent shivers through the market. So I would say that nervousness, uncertainty, discussions about the outcome of the election, all this is really what's happening today here on the trading floors.
blockbuster debut has been put on hold. Maybe it's completely off the table. Shares in Ant Financial and in the parent company Alibaba have plunged. What's the impact on tech stocks elsewhere in Europe?
Well, I can tell you that tech stocks are mostly higher. The Nasdaq future is also higher. You know, the fact that this IPO by Ant Financial was postponed, or maybe even is completely off the table, is not entirely negative news for people here, for, you know, traditional trading places and traditional centers where IPOs are happening too. You know, when the Chinese announced that they would allow Ant Financial to IPO in Shanghai and Hong Kong only, of course, people in New York, people on other places, people at the Nasdaq computer exchange also, they felt a bit neglected. They felt a bit left out of the game. They would have liked to see a dual listing of maybe Hong Kong and New York. Now, after it has been called off, looks like the traditional places are the places to go if you want reliability. Here in Frankfurt, it's unimaginable that an IPO is called off so shortly before the date because of you know, regulatory reasons coming up very quickly out of the blue. So maybe we, or in particular, of course, Nasdaq, can profit from this. On top of this, we had a number of earnings reports from tech companies here in Germany. Zalando, for example, which is, you know, an online portal, a website where you can shop for fashion. That is, of course, a business model very much in demand in Corona times.
Right. And back in the U.S., the Federal Reserve's chief monetary policy makers have a two-day meeting. What's expected if we take into consideration that no new fiscal stimulus is in sight in the U.S., at least not in the short term?
Yes, and that's why few people on the markets are expecting that the Federal Reserve comes out with more stimulus, just like the Reserve Bank of Australia this week announced a significant cut in interest rates, and also a $1 billion Australian heavy bond purchasing program. But I have to say a minority of people believe that the Fed will do something. It's more likely that Fed Chair Jerome Powell will say things meant to soothe the souls in the United States, and also to remind fiscal policy makers that it's their turn now. What America really needs is another fiscal stimulus, another cash injection into American households, so that the economy can, you know, continuously be prevented from making another fall downwards. This is what nobody wants, and this is what is hoped for, some fiscal stimulus soon, even if we don't have, you know, a president or a definite winner of this presidential election.
All right, Conrad, we will monitor that. In the meantime, let's continue to watch the U.S. election. While investors around the world are gripped by the unfolding election drama in the U.S., the race for the White House has proved to be closer than the polls anticipated, and it isn't over yet. But let's see how the intraday numbers in the UK are doing with Juliana. Hello, Juliana. Good afternoon. So much uncertainty as to who wins the U.S. election. After lurching lower at the start of trading, the FTSE 100 index of UK shares got back where it ended on Tuesday. Where is it at the moment, and how's the currency doing as well?
Well, the currency has taken a big plummeting by the US dollar, but confusion is certainly reigning on the equity markets. 24 hours ago, Chimeze, when we were having this conversation, you know, all of the equity traders here in the UK had hoped there would be a decisive result and that the blue wave would show itself in its true colours. That's not happened. It's on a knife edge. But just having a look at the FT and The Economist, Biden is still slightly in the lead. He's got those 238 electoral college votes. Trump still has just 213. And in the UK, a lot of the market traders are looking at betting sites, and some of the world's leading betting sites still have the former Vice President Joe Biden winning this election. But of course, it is too close to call, but everybody is watching and anticipating. The FTSE All-Share is up 0.08%. The FTSE 100 is up 0.07%, and the FTSE 250 is up by 0.26%. As I was saying, in the currencies market, the pound at the moment down on the US dollar by 0.66%, down on the euro by 0.34%, and down on the Japanese yen by 0.45%. The sun has set on the White House, but no result just yet.
And who are the best and worst performing sectors on the FTSE 100 as investors react to the US election?
Well, interestingly, banking and commodities are not doing great at the moment. They were doing very well yesterday, but that's because here in the UK, everybody had traded in a really clear, decisive victory. So they appear to have been getting the worst of the fallout for the fact of it's not being decided. So at the moment, Standard Chartered, their shares are down 5%. HSBC are down 3.42%. Lloyds Banks, their shares are down 1.6%. We do have a couple of risers. BAT, British American Tobacco, they're one of the biggest risers on the FTSE at intraday, and that's because of yesterday they announced they had acquired a nicotine pouch product by Drift Sciences. They're obviously trying to expand just from smoking tobacco, because a lot of people are using vaping materials at the moment. That acquisition, there was an undisclosed amount there, so we're not sure how much they purchased it for, but their shareholders are still happy today. AstraZeneca as well, and GlaxoSmithKline, their shares are up 3.3% and 2.3% respectively, and that's because amidst all this US election drama, one of the big leaders in the Oxford University AstraZeneca trial did announce on radio this morning that perhaps there could be a vaccine in place by Christmas. Very unlikely, but he still did say it, and of course that's been picked up, which is why all the pharmaceutical giants are doing pretty well at intraday.
And talking about corporate news there, Marks & Spencer has crashed to its first ever loss of a pre-tax loss of about £87.6 million in the 6 months. This perhaps supports the headline that up to 18,000 UK high street premises could be vacant this year, right?
Yes, it does. It just shows the state of British retail and the British high street, especially because Marks & Spencer's, that really is the staple that everybody across the world is familiar with. And this 9 months earning that they're reporting up to September is the first time that they've reported a loss in 94 years, which just goes to show how much COVID has wrecked the British high street. And if you compare the loss of 87.6 million to this period last year, they were reporting profits of 158.8 million. So they've really had their profits dented. And they're also really struggling because we're going back into a lockdown. Again, lots of our viewers in Britain will be familiar of those Marks and Sparks or M&S adverts where they're selling all of these beautiful glittery clothes for drinks after work and Christmas parties. That's completely out of the window, which is why they're also reporting that sales are down 15.8%. We're seeing this not just with Marks & Spencer's, we're seeing this with a lot of other retailers. People are pretty happy, if you're working from home, Chimazé, to be in very casual clothes underneath their top half for their Zoom and other sort of cool meetings. So they're seeing lots of casual clothes selling, which of course sell for cheaper and not the expensive clothes. But Marks & Spencer's, given its size, is never down and out. They have recently signed a deal with Ocado, which is a huge and increasingly growing online British retailer. They used to sell Waitrose foods, but they've now combined with M&S. earlier this week, Ocado shares were up 10% because since they've acquired M&S Food, their shares seem to be surging. So they have updated their profit forecast for the rest of the year. So M&S will hope that during this pandemic and during the lockdown, as we saw earlier in the year, food may surge. So not a great day for M&S, but, the truth will still be told. E-commerce is the way to earn your profits these days.
All right, Juliana, well, all eyes are on the U.S., so let's continue to monitor those vote counting there and hope for the best. Well, we'll take a break, and then when we come back, we'll do more stories from the African continent. Do stay with us. Nigeria, along with Sudan, South Africa and Senegal, will lead Islamic finance growth in sub-Saharan Africa. This is according to rating agency Moody's. In a newly published report, Moody's says Islamic finance penetration is very low in Nigeria, but is starting to gain a foothold as the authorities seek to increase banking among the country's large Muslim population. Joining us now to talk more on this report is the author of the report from Moody's, Peter Mushangwe. Thank you very much, Peter, for joining us on the program.
Thank you very much. Good afternoon to you, and good afternoon to viewers.
Now, Islamic banking has made little headway in Africa, yet you see growth on Islamic financing on the continent. What are the major factors that will drive this in Africa?
So we looked at it from the perspective of what could drive the Islamic banking penetration in Africa, which is a continent which is a fairly large Islamic population. And we picked up about four factors that will support the growth of Islamic banking. Firstly, there is enhanced awareness, as you indicated in your introduction. We see, banks training their staff in terms of Islamic banks. The same with the regulators. They are also training their staff. We see, a changing regulatory landscape. And what all this do is that it will enhance the awareness of Islamic products by households and corporates. And this will increase the demand or the penetration of Islamic banking assets. Currently, Islamic banking assets penetration is very low. For example, in Nigeria, it is only about 1% of total banking assets. So this will be one factor that will support the demand for Islamic banking assets. The other factor we look at is improving regulation. Again, related to the awareness, we are also seeing regulators continuously improving the environment of Islamic banking in their systems. An example, again, is in Nigeria, where we have seen a number of directives coming from the central bank about how Islamic banking should be carried out by banks. Again, this is supportive of the general uptake of Islamic banking assets within the continent. The third one is, growing wealth levels. Africa's per capita income is very low, but we do expect it to grow over time. And as people become wealthier, they will demand more banking products. They could be savings products, investment products, or credit products. And as a result of that growth in per capita income or wealth levels, we expect banking services to increase. And the fourth is the large infrastructural gap that we see in Africa. And as I, indicated, the regulatory environment, the awareness, we are seeing sovereigns issuing sukuks, to fill this gap to fund infrastructure.
Now, Nigeria is one of the countries you have mentioned in your report that will lead the growth of Islamic finance in sub-Saharan Africa. But do you see Nigeria's weak economic condition as an obstacle to this?
In the short term, yes, it will be, an impediment to this growth. We do expect Nigeria's economy to grow by 0.8% next year. And to contract this year, as would be the case with most economies due to the coronavirus pandemic. What this will do in the short term is to reduce the demand of these banking services by corporates and households, but also from the bank side, we will see probably banks becoming more risk averse, so they will tighten their lending criteria, and they will lend less because they will be unwilling to lend or to take risks that may turn into non-performing loans down the line. But when we look at it from Islamic banking perspective, regardless of the slow economic activity that we expect in Nigeria, Islamic banking seem to still have good room to grow because of the low penetration that I talked about earlier.
Now, there are only 2 fully fledged Islamic banks operating in Nigeria. What's your assessment of the performance of these banks?
Yes, we do have, Jais Bank PLC and Taj Bank as 2 fully fledged Islamic banks. Taj Bank is very new, really, so it is yet to develop its business. But for Jais Bank, which we believe is, the largest Islamic bank in Nigeria, its performance has been very solid. When we looked at numbers from 2012 to 2019, for example, it has outpaced the growth of conventional banks. Its assets increased by 42% compounded annual growth rate compared to 10% for conventional banks over that period. Deposits again also increased by 75% compared to about 7.7% for conventional banks between 2012 and 2019. Of course, these numbers are growing from a lower base, but we think that to a very large extent, they also indicate, strong uptake of Islamic banking products within the system. And in fact, when we look at other commercial banks that have Islamic windows, or that have services that they offer that are based on Islamic principles, such as Sterling Bank, we also see the same trend, where their Islamic book is growing quite fast. For Sterling Bank, between 2014 and 2019, it increased by 14 times. It now contributes between 10 to 15% of their total profits. So we are seeing this trend where, despite the challenging operating environment for Nigerian banks in general, the banks that have Islamic windows and the Islamic banks are, enjoying quite strong growth.
All right, thank you very much, Peter Mshangwe, for sharing your report with us. Thank you for your time on the show.
Thank you very much.
Peter Mshangwe is the banking analyst at Moody's. Our South African President Cyril Ramaphosa says over the next 4 years, his government hopes to unlock 1 trillion rand in infrastructure investment. Speaking at the Infrastructure South Africa Project Preparation Roundtable, President Ramaphosa said it is critical that the government's infrastructure investment plan is grounded in a credible project pipeline.
Hope is that we should be able to unlock 1 trillion rand in infrastructure investment, and that is why it is so important to be in this dialogue and conversation with you around the round table, so that we can identify the number of projects that we want to embark upon, and you can also see our seriousness and also be willing to participate. A significant vehicle for achieving this is our National Infrastructure Fund, which has recently been operationalized. It is, as you well know, a blended financing instrument aimed at the de-risking of projects to make them attractive for private sector participation. I am pleased that the multilateral development banks, pension funds, and commercial banks have agreed to participate in the governance structures of this infrastructure fund.
President Cyril Ramaphosa, South African president. And it's on that note that we wrap up today's edition of the program. Thank you for watching. I'm Chimeze Obi. Welcome.